Welcome to the Big Announcement Coming Soon podcast. I'm one of your hosts, Michael Bull, joined by Jeff Renson, David Collette, and Nick Garvin. Now, we have the first time we've had all four of us here today, so we're going to do our best not to interrupt too much. And we're going to go straight to the news with Jeff Renson. There's a lot going on in the news as we're all losing money. Tell us, Jeff, how you doing with your FTX?
FTX, I got off of FTX a little bit early when things started to seem dicey before FTX US went down. So I'm happy with that. But anyway, the news is good. I mean, aside from that, Apple Pay and Circle are working together, and that's going to onboard Apple Pay into crypto payment options. So if you want to go buy crypto on some of the apps, you can now use your Apple Pay system. I like that because they're working with Circle. So instead of Apple Pay having to work with each app, they work with Circle. USDC is already in the app, and it's a quick integration there. But it's a lot of this back end stuff like we've been talking about. Every week we have a little bit of that positive news that Apple's working with Circle because crypto's not dead. Trezors and ledgers. Self-custody is up. They had a massive week of sales. People withdrawing their coins off of every exchange they can, if they can. And self-custodying finally. It's tricky, and I know for different people there's different levels of trust in yourself. I only self-custody a third or so, maybe half, more like a third, I think, of my crypto, and use some other places to custody the rest. But it is a good thing to do. And
shouldn't we all be doing that all the time now? So we just learned that you can't trust any brand anymore.
We should, but David always has good points on, like, you trust yourself, and we've all been tech coaches and teachers, and we know how people are with tech. David, what do you think? Put it on a ledger?
Yeah, I mean, like, in the world of today, there are still passwords written on, like, Post-its stuck to screens. So, like, self-custody is really, it's one thing. I mean, there's, I guess that's the point. Like, I've rescued too many people who have been like, oh, I lost my email password. And you're like, what was your email? I don't remember. Like, wait, you don't know your email? I don't know if we can help with that. So it's quite a few steps for a lot of people to take. But yeah, totally. I mean, the thing is, like, if you get into crypto and you are at a certain threshold of money, like once you get to a certain threshold of money, you owe it to yourself. And I think the space probably to invest the time and effort into doing it. I dusted off my Trezor the other day and took a look at it and got ready for it. But yeah, exactly. I mean, but I think for the most of people will probably just custody on exchange. And so what you need to be looking for is, does the exchange offer weird products that offer outstanding interest that doesn't seem possible otherwise? To do that, they must
that interest, though. We love that interest.
Exactly, right. I mean, and that if it's too good to be true, it is. Mm-hmm. So basically, if you're a noob, put your money on Coinbase or Kraken, maybe Gemini. But don't use the earn product, for example, on Gemini, because.
But even when you say too good to be true, that earn there was only 6%. It seemed conservative. It was offered by Gemini.
Yeah, reasonable.
But when I was in Gemini a couple months ago, I moved funds in, and I clicked on the earn thing to look at it, and it pops up very clearly, and it's like, these funds go out, and I was like, no thanks. So I liked their disclosure. But when I logged in today, and I'll put this on the screen, this is the first thing I saw when I logged in today, and we know that they've stopped the earn program, but you can still, when you log in, if you want to put coins in, I feel like they should update their website like a week ago when we all started seeing all this, and say maybe slow down the earn program like last week.
Yeah, definitely. Because, I mean, a lot of people go onto these sites and think it's like a bank. And they're like, oh, well, if I can.
Yeah, it has that look and that feel. And I listen to podcasts that talk about how great it is. And the people who run it sound really cool and all that. I'm like, oh, I can trust this. It's like Wealthfront or something.
Yeah, but it's not.
Like that, it all depends on your level of comfort with self-custody too, right? I mean, we all got our first hardware wallet and we were nervous at first because you're right. Like, when you're new at this, you do want to trust someone else. Probably there's that accountability factor, but yeah, I was nervous when I had to write down my seed phrase and then put it in a place that's only, known by me or a few others, and it's not digital. I can't store it. Yeah, it's on the back of my computer, Mike.
Right,
That's my passport.
It's written on your microphone there. Just in a gray
Yeah.
pen.
But I mean, I think like we owe it to ourselves to learn that too when we get to a certain threshold, and that should come with comfort in the space. And hopefully, maybe the silver lining is that a lot of people are seeing the upside of learning that on your own, as compared to trusting grifters and centralized exchanges.
I don't know. As for former technology coaches for schools, and we don't do a lot of self custody. It sounds like there's a lot of that. Then how is the average person going to do it? Like I've got all the systems to do it. I was just lazy. Like I've got all my encrypted
easier,
password
right?
systems, but yeah. So I don't know. We'll see. We should probably get on with the news though.
Oh, last thing, the FTX hacker has moved all of their illiquid coins or whatever they could sell into ETH. So they are now the holder of 228,523 Ethereum.
Wow.
It's not going to run into the OFAC compliant blocks, but if they can dump it in non-compliant blocks, along with what might happen with the Grayscale ETF, it's just that contagion. It keeps spreading, and we don't know what's going to happen with this. And if they choose to exit the ETH market with that much, it's another unforeseen dump onto the market.
Mm.
Well, there's also one real interesting point on this in that I think Dylan LeClaire brought it up, but essentially we will ask a question like, what if the law gets involved and says that ETH that's in that address must be frozen and cannot be used by the Ethereum network? And everyone's like, well, the Ethereum network is decentralized. It's like, yeah, but if you process that with a validator, it is illegal. And so essentially what it would, I think it's asking them at the base layer of Ethereum to lock out certain money, which is going against a lot of principles. And so he made kind of a meme where it was like, Ethereum 2.0 classic.
So that whole decentralized thing, that didn't last long.
Yeah, so I mean, that'll be the challenge. It'll be interesting to see what happens with that money, because if it is forced by law to be locked, I don't know what happens.
All right, we'll have to see. Okay, shall we move on to Nick's? Nick wanted to talk about NFTs as probably a better way to onboard people correctly into Web 3.0. It requires a non-custodial wallet, and it's actually a usage of crypto. So you're saying we should all be hanging, Nick, in the NFT space, forget all this Bitcoin stuff.
Yeah, I'm saying I think we'll have a better understanding. Well, first of all, actually, we haven't really achieved that killer app yet that everyone talks about. It wasn't any of like the Blockfolio apps or any of the NFT apps or any things like that. But we have never really found that key to mass adoption. But I believe that NFTs like now have a better like way forward or opportunity to onboard users, and it's creating a lot of cool opportunities for education in the art space. And we've talked about this before, how the University of Nicosia has run free courses that are completely on chain, and it's all about educating users about custodial wallet or self-custody and non-custodial wallets, the importance of a hardware wallet. Now, granted, we're still watching this space evolve, and we're not saying that they got out unscathed. They've been wrecked. Most projects are down 90%.
Wow.
But and while FTX is happening and people are getting rugged, I think a lot more people are leaning into a space that is like kind of more towards like the long term of educating and onboarding. And I know there's a lot. The metaverse gets a lot of flack sometimes from Mark Zuckerberg and stuff, but I think communities are being built, brands are being built, creative entities are being built around these tokens, and I think that's a lot more optimistic way ahead than what we see now, because we really can't just jump on the next L2 bandwagon or savior, who comes out from the dungeon. Not saying that we're in the clear. We have a long way to go, but it's a neat perspective nonetheless.
Is it the best perspective? Is this the truth?
It's a good perspective. I've done a lot of NFT,
or a balanced perspective, maybe.
Yeah, but in the NFT world, there's a lot of people helping people do their first thing, and your first thing is not connect a bank account to Coin, or sorry, I guess it is connect a bank account to Coinbase and get some ETH. But you're still not there. That's where other noobs stop. Now, step 2 is get a MetaMask. Maybe you also get a ledger, but you get into self-custody because you're not buying NFTs on Coinbase with Coinbase Wallet, as the numbers show. There's a few other. Solana had some self-custody, or some FTX had custody, I think, solutions, but most people self-custody NFTs. And I've had more discussions about how to send an ETH transaction, how to cancel one, what gas is, really what Web3 is, not is this coin going up or down in all the NFT groups. It's like more real crypto. They're actually doing the whole decentralized crypto thing, and it's not about. I mean, it still is the finance part, but because the onboarding to pictures is self-custody, I think it's a great way to get people involved in real things, not just alternative banking.
Yeah, and it's an interesting take at the end, right? He says, and granted, this is from an account that they run a meme PFP project, and they have about 200,000 followers. But it says we don't teach kids the value of money by trading. We give them money to buy toys first. Just an interesting take. This whole game.
I want the Lambo to be my toy, but what's David think?
No, I mean, I love this idea because I think, like, essentially, one of the biggest problems with crypto tokens, for example, is there's like 50,000 billion of them. And, like, that's not a number the human brain really comprehends at all. Like, so people are like, oh, what if it goes to $1? And you're like, well, if Ripple goes to $1, that means it will outpace all of the money in the world. And they're like, that's confusing. What if it goes to $1?
What's market cap?
Yeah. Whereas, like, if you have PFPs and you're minting 1 or mint 2 or you mint 5 or whatever, like, it's like a reasonable number, and you actually invest in each one of them, and it becomes more of a commitment like a ground up approach to a commitment, rather than like all these VCs bought like the billions of tokens and then they're going to let you buy like 10 of them, but it's really not worth anything. Whereas like the NFT culture comes from the ground up. The value of the project really does depend on its people. And so I think it is a really smart and interesting way of it's almost like a different way of tokenizing value.
Yeah, exactly.
All right, moving on to lack of value. A study comes out from, I never heard of this group, economists at the Bank of International Settlements from 2015 to 2022, saying that most people, 75% of people, have lost money in crypto. And most of those people are males 35 or younger, traditional high risk group. Now, I think we're all a little older than that, right? So we're just like the old farts, or you guys might have started though back in when your early 30s and done maybe a little better, because we have Bitcoin at 250 in August of 2015. It peaked out close to 70,000 in November of 2021, and now it's down to 16 or something like that right now. So it's, the whales, according to the article, at least the whales have been leveraging all those opportunities, making all the money, but 75% of the people out there are funding the other 25. Thank you.
Yeah, that's how it happens. Essentially, you can look at it on the chart. Bitcoin for the next, certain amount of time will take a while to get up to all-time high again. Mm-hmm. And only when it breaks all-time high does it start to become news, and then everyone buys in. And at that point, they're selling to the whales who have kind of created the market through the doldrums. So essentially, like now, when everyone is 75% down, that's when the whales are buying, when we should be buying. When everyone thinks crypto is dead, we should be buying. And then when everyone thinks, it's the next biggest thing and everyone's a genius, is when we should start selling. So yeah,
based on the past history that this has worked. I mean, unless crypto really is dead, but yeah, that's always
exactly. Yeah, exactly. I mean, I would say that it does feel very similar to last time crypto was dead, and all articles come out and everyone laughs, and it's pretty similar. Big things blew up. So yeah, I mean, it has the same sentiment feel to it anyway. So yeah, like as long as you believe crypto is not dead, now is pretty good time in terms of bottom things. Like you could not see worse sentiment for a product in the market. Who is left to sell? Who's like on the edge? Oh, if it dips another 1,000, I'll sell. If that's you, sell now.
Right. Yeah, I feel bad for the people that I've met along the way that are trying to make money, like trying to buy a lottery ticket through crypto rather than just part of their investment portfolio. But
yeah, you can't just keep flipping a coin and expect it to kind of come out as good odds. It's like, ooh, it's 50-50, I win this, and maybe it'll go up another 2x, 50-50 again.
All right.
You
keep flipping the coin, you'll lose.
Yeah, back to what I said last week. Maybe we should just all play, go and play blackjack here and there. I know in the long term you won't win, but in the short term you can.
Well, when I first got in, odds. One of the best things about being into crypto while having a job is I blabbed about it, and nobody cared. And nobody cared 2018 and 2019 and 2020. They're like, so you're the Bitcoin guy. They're like, should I buy it? I'm like,
you should do a podcast.
Dude, 2 years ago.
Yeah.
Well, they did.
Paid group.
My advice was, it seems like it's kind of going up, and I don't know if that's the right time to buy. And my favorite comeback to that in 2022, somebody who never got in asked, and they said, "Is it a good time to buy?" I said, "It's going down. It's probably still going down, but it will be." And they go, "Well, when it goes down is the wrong time to buy. I want to buy when it goes up." So they're literally saying, "I want to buy the top." They're not hearing their own logic.
Right.
It sounds ridiculous, and I think the longer you trade and understand things like this, sometimes the harder it is to remind yourself. But like when you say go touch grass, go talk to people who don't invest much and get that sentiment feeling, because there's a few number of us. There's been a lot of those sentiment checks on Twitter of, if you're still here, like this tweet, and the numbers get smaller and smaller.
Yeah.
Okay, so then let's talk maybe about the average person. It's not in one of our articles, but we were going to talk about what happened at BlockFi. So somebody like me who's got my coin in BlockFi, I'm like, woohoo! Like, how come I can't get it out? Like, isn't there a 1-to-1? Like, I guess I was getting some interest back on some of it, but how is it all suddenly frozen? And aren't they regulated? And isn't it supposed to be the safe space? Like, what's going on? Can anybody explain that?
Yeah, go ahead, David.
Essentially that is it, right? Like BlockFi has always kind of come under pressure and been beaten by people for offering, essentially they must be on leverage to offer the percentage they get.
Right.
But they've always kind of came back. And then the last kick in the teeth was that they did finally come back. They were safe, but then they were backed by FTX, which blew up. And so like BlockFi was almost, turned out to be banking. Like they're finally they were saved by Lehman, and then Lehman went down. And so essentially, but the BlockFi situation, it does seem that because they were, as legitimate as they could be, I think the way the bankruptcy will proceed is that they do have customer funds on their books. They weren't stored at FTX. And so those people will be cleared first. And then the investors who bought BlockFi or invested into it will go last, and probably people like yourself will get money back, but it may be a while.
So what was the deal with FTX then? Were they giving money, at least maybe in the form of crypto, to help with operational costs? Like how does the loss of FTX impact my funds?
Yeah, they pretended to have a whole bunch of money to buy it with that was actually not there. And so then it's kind of like a clawback, I guess, like after the fact. They're like, oh, you bought this thing. And then, no, we didn't. Because we didn't
BlockFi had
have
already
money.
lost the money with 3AC and Alameda and other investments. When FTX came in, it was to save them, but they were saving them with FTT collateral. So there wasn't much. And to build on what David said, BlockFi seemed legit in 2020. In 2021, 4 weeks ago, maybe 10 weeks ago, at the same time, a lot of us, and not everybody, trusted FTX, Alameda, when they said in 2019, BlockFi has money with Genesis, and Genesis says, well, we have it with 3AC, and it's going up only, and we're all thinking, well, shit, the only people who are winning are Kyle and Sue, and it turns out they're losing. We all believed certain people were winning, and those people were the ones taking the money. So we thought we were doing the smart thing. Give the money to BlockFi. They're giving it to the smart people. I'm taking my 6%. Sue and Kyle must be making 15. BlockFi's taking a bit on the back end to back it up. And it turns out they were betting on the biggest losers in the group. And we all trusted them to do so. I don't know. We didn't know everyone was tricked.
Well, that's what's really different about this market instead of like last time. Last time you had a bunch of ICOs and things like that, and they were they all blew up, or not blew up, but lost heaps of value. But all that value is relatively there. This market is completely leveraged in every single different direction. So one thing blowing up is causing everything else to just blow up in various different ways. So I think the big lesson from this cycle has been, leverage should not be entertained at the institutional level.
Yeah, when their brand is that it's safe and responsible, and I can park my Lambo money in there.
Yeah, and then they're farming farm tokens like yams and stuff. What?
Now it's time to get a job or something. Even I hear Jeff's looking for a job.
This isn't a job. Talking to you guys.
Yeah, that's right. No, this is a passion project. As soon as you get paid,
we're gonna make it.
Yeah,
be okay.
NFTs to lead the way. All right. Jeff, do you want to talk quickly about, and then we do have some stuff about geeks and MOPS. I'm not sure we're going to be able to get to both, but Jeff, did you want to talk about can we trust you want to talk about Grayscale Bitcoin Trust? Can we trust Grayscale Bitcoin Trust? What's the difference from the average person? I would think, oh, everything's going down. Why can I trust that?
Well, yeah, that's what I want to talk about today is what it is. It's been coming up that since the digital currency group owns Genesis, an investment trading arm, they also own Grayscale, who issues the GBTC and ETH and a few other coins as a
Uh-huh.
trust. Now, because GBTC is a trust, it's traded as a security. So certain companies can go and go in their stock portfolio buy BTC where they couldn't buy Bitcoin, and maybe they haven't
Right.
gone through. And I know there's been
And that
workshops
was
on
that was the
this.
whole point of that, is it gave that angle for somebody like me who has Wealthfront. I could buy some
Mhm.
crypto through Wealthfront. Otherwise, I couldn't.
Yeah,
I'm actually buying Grayscale. I'm not actually buying
Hmm.
crypto.
well,
Right.
you're buying a portion of the trust, and the trust holds the Bitcoin.
Gotcha.
So it is kind of a call on their hold of gold, and they have the stack. They have the Bitcoin. But the problem is because it's a very small pool, there's only about 64,000 Bitcoin in there. In a bull market, it trades at a premium. So like you're saying, the people who come through on those platforms that trade securities to buy their Bitcoin are paying more for it because that's their only way in. And in the downturn, it's their only way out. And who are they selling it to is everybody else who wants out as the institution. So it's currently trading about a negative 30% discount.
Oh,
So,
wow.
so
Off of the price of Bitcoin.
yeah.
Wow. So should we all get out of that too?
Well, it'd be
Well, yeah,
a
it's
good
interesting.
time to get into it. But I want to
Okay.
I want David's view on this. But first, it's a lot less liquid. But as of this morning, if they need to raise funds and they haven't been able to turn this into an ETF, they have to dissolve the trust 100%, I guess. They can't sell off a little bit of Bitcoin. And I'm not an expert on this, but they'll need to just sell it all off, return the money back to the people who own parts of the trust. And if they sell it off as Bitcoin, they get 30% more than selling it off as GBTC.
Okay.
However, if they sell that much Bitcoin, how far down will they drive the price? So you have this mini illiquid market that's open to a very large market as a subset of the bigger Bitcoin market. And that's also been tangled up with liquidity issues at the digital currency group because of Genesis.
Hmm.
Contagion. I don't know, man. It gets confusing.
Hmm.
No, that was really well done. That's exactly how it is. And yeah, couldn't have said it better. And so the problem is then, yeah, like, does Bitcoin get dumped on the market? But in doing so, they're also hurting their GBTC people because they're driving the price of Bitcoin down more. So I think the most recent Genesis article that came out was something along the lines of, we're closing our earn product, but everything else is fine because it was all segregated in the way FTX didn't do it.
Yeah.
Right.
And so our earn product will probably be bought out for what's missing by DCG maybe, but they needed to just stop it because it was just atrophying money and they didn't want everyone to panic because they ran out of money, I guess. But yeah, I mean, it's interesting because about a week ago, I was like, because I don't have access to GBTC, but my brother does. I was like, you should probably buy Bitcoin at $9,000 as GBTC because that's an amazing arbitrage if you're in it for the longer term. And I still don't know if that's a bad idea because if they liquidate the trust, you still get the Bitcoin back what it's worth and stuff. So I don't know, like
Not at the discount of 30%?
No, because if they liquidate the trust, they're actually selling the real Bitcoin
For 1-to-1.
Rather than the
yeah.
subset of the GBTC. And
Okay.
the part of that was also interesting, getting into regulation, and we can see how Gensler has been shaking hands with Sam while going after Kim Kardashian. This whole GBTC thing and denying the ETF, creating a small liquidity pool, the articles that are linked below where I'm getting info for this, their whole angle is how to arbitrage it. So how to make money on the difference between the two prices. And it's supposed to be a nice protected product to, give institutions stability. Really, you're creating a derivative that creates an arbitrage market. So you're creating a trading opportunity, not a financial stability.
Yeah. And we got to remember, right? This is how some of those like people rose to power, like Sam, right? From the arbitrage into kimchi premium on Bitcoin. And I just wonder if it's good for the space. That's all. I mean, we all understand and we all see value in the discrepancy so that we can arbitrage and make money off of it. But is it really good for the space if it provides an opportunity again that's going to attract the grifters and the people who are not really in it for the same reason, but they're just looking to make a flip until they can't anymore because it's the gray area.
Talking about self-custody, Nick, you're right. If you're in GBTC, you're in it for the flip. You're not in it for Bitcoin.
Yeah, because the key element of it, if you go back to the core principle, is that Bitcoin has a limited supply, as does ETH. And so, like, if you're earning interest other than staking it, you're leveraging the product, right? You're in risk. And so, yeah, it needs to be a lot clearer and a lot more hard, I think, for that to occur, because right now it's just like, yeah, no worries, we'll just add an anchor button and just put 15 Polygon. And like, yeah, there needs to be way more clarity for people to like, okay, now you're entering the gambling zone, and this zone here is, etc.
All right, we only got about 5 minutes or so left in the show. David, do you want to talk about geeks, mops, and sociopaths and subculture evolution? Is this talking about the adoption of something like Bitcoin and how it goes through different segments of human population, or do you want to skip it?
Yeah, kind of. We could also push it to next week and do it then. That's not a problem.
Well, now we're teased.
All right. Well, I'll give that.
We got 3 minutes plus, so why not?
Yeah, that's fair. So essentially, yeah, it's a really good article I saw tweeted out by someone, and essentially the idea is that every culture has certain people in it, and so it starts with the builders, the creators of the culture, the whatever, Satoshi, and then you have fanatics come in to support them, and they don't do the creating as much, but they're like super into the thing, and they, let's say that's the Roger Vers of this world. And then come the MOPS, and the MOPS are just like the apes, essentially. Like all the apes come in, and that's fine for a while because you need there to be apes for there to be a thing.
Right? Yeah,
you need to get a whole bunch of people. But if you get too many of them, it becomes just about, one-upping on each other, whatever. Like you really have to create your culture, otherwise the MOPS overwhelm the fanatics who aren't there to support them. They're there to support the creators, and so fanatics get disillusioned because I'm constantly being berated by these people about why the number doesn't go up all the time.
And they move on to the next thing, I assume.
Yeah, exactly. But then what happens is, and this is kind of pertinent to the FTX situation, is what you have is alongside the creators at this point and are sociopaths. They come in and they see there's opportunity in the space, and they take the role of creators because they're very smart. But they're better than creators because they're more charismatic and they're more, they offer new things and stuff. And the problem with a subculture is that people can't, if you're a MOP, you don't really know the difference between a Jesse Powell of Kraken, who's very rarely out there, and a Sam of FTX. And one is like a bastion of our community and has started it all the way from the beginning, runs Kraken and just recently stepped down, I think. And then Sam, who is a complete sociopath. And so you've got like in any subculture and community, if you don't, well, not if you don't, but like it will go through kind of like evolution, and sometimes it will kill itself if it just kind of obliterates itself with, I would argue probably like Wall Street Bets probably eventually kind of fades away because I don't know it has a staying power. It doesn't really have a technology or anything behind it. It's more just a bunch of people like looking to, whereas as crypto clears out of all those people, what's left is a bunch of people who are fanatics about it, who are building, who are creating things, who are like taking the next thing, even though all their money is gone, or even though, whatever, they're here for the thing. And so I think like it's going to be interesting to see how crypto evolves in this, but it was really kind of just an interesting way of looking at how any culture lives, survives, goes through cycles, purges itself, and what it kind of takes to, yeah, it's interesting. So, and also kind of brings you back to who you should look to in the community who have always been there and always been right.
Okay.
And drowned out by recent.
Who is that? Is that the sociopaths? I mean, are we all trying to be sociopaths? You said they
no.
And exploit the opportunity. So who should
It does say that there need to be sociopaths because sociopaths create the kind of competitive nature of things and they drive people forward. Like you think about the Bitcoin fork debates, that took freaking forever to come about because there was no. And then the competition caused it to happen. And did the good side win or not? I don't know. But either way, it pushed it forward.
Well, sociopaths put NFTs from CryptoPunks that no one had heard of to everybody starting their own PFP project. And it was a terrible burnout. And a lot of people are leaving right now but what's left behind is a whole lot more people.
Yeah, another trail.
Yeah,
Mhm.
and really, this is something we've been talking about for a while. We saw the sociopaths and all the MOPS come in 2020, and David and we've been talking Goblin Town. We want to party in Goblin Town when the only people who are left are the ones who were here before. Party with the
Eric
Fanatics
Voorhees,
again, and that's when-
Kobe, Eric Voorhees, Laura Shin, obviously, as a reporter.
Mhm.
There are a lot of
Ledger.
key people who have been around for many, many years. Yeah, Ledger 2017, I think. But there are like key people who've been around for long years, always kind of saying the same things. And then each time one of these burn down happens, they're like, yeah, I'm still here saying the same thing. And we're like, oh, yeah, that guy.
All right, so we should probably conclude it on that guy. So hopefully all of us are that guy at some point in our lives.
I aspire to be that guy.
Don't we? And or a sociopath making a lot of money. All right, so Jeff, David, Nick, it's been a pleasure hanging out with you. We'll see
doing
you again
predictions
next week. Oh, we're going to do predictions, yes. Yeah, we got about less than a minute left to go in the round. I predicted we'll go down because it seems like it hasn't all flushed out yet.
I think it's gonna spike down to the previous low, maybe a tad lower, and then spike back up and be resting at 19K by the time we meet again next week.
Oh, wow, that's a heck of a spike. Nick, you got a prediction?
I just saw that Arthur Hayes tweeted earlier. He's saying that he's ready to buy Bitcoin around 10. And I don't know. He seems to know a lot. So
he's always wrong on his calls, though. He always makes the wrong call, so that's bullish.
Yeah, there we go. And finish us up.
Then.
Yeah, I want to see. I think we see a touch to 15, and then we're back at 16. We're just here forever. Everyone knows Contagion, right? Hopefully, well, no matter what happens, you should have already sold if you're going to get out, and if you're going to get in, you got in. Like, we know it's going to keep happening.
Yeah.
All right, Nick, David, Jeff, we'll see you guys next week.
Yeah.
To the moon.